Today on Fear and Greed, one of the market darlings of recent years, WiseTech Global, is in crisis after 4 independent directors, including the chair, resigned over differences around founder and former CEO Richard White. Post-interest rate polls suggest opposition leader Peter Dutton has a chance of forming government, and petrol and diesel sales in Australia hit record levels. Plus, Perpetual walks away from a $2.2 billion bid from private equity group KKR, and plenty of earnings results. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Tuesday, the 25th of February 2025. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, WiseTech Global, one of the best performing stocks of recent years, is in crisis at the moment, with 4 directors resigning yesterday and plenty of unanswered questions around founder and major shareholder Richard White.
One of the 4 was the chairman, Richard Dammery, also going Lisa Brock, Michael Malone and Fiona Pak-Poy. The statement that came out yesterday for an ASX-listed company was pretty remarkable. I'll quote it. The reason they resigned followed intractable differences in the board and differing views around the ongoing role of the founder and founding CEO, Richard White. Pretty clear what the problem here is. Not helping the company yesterday was a downgrade to the earnings outlook thanks to delays in 3 new products. WiseTech had halted its share price, trading its share price last Thursday. When it reopened yesterday, it tumbled 20% and stayed that way all day. So it actually finished the day down 20%. Tricky one, this one. Richard White is worth about $16.5 billion. He founded the group back in 1994. Last year, there were a number of allegations involving former partners of Mr. White, one in which he allegedly bought a $7 million home, waterfront home in Melbourne. Then earlier this month, 9 media reported 3 women had come forward with allegations involving Mr. White. He was forced to stand down as CEO last October. Then it emerged that he got a $1 million consultancy reporting to the board. Now we find out that he hasn't actually signed that deal. And whatever's going on inside that boardroom is clearly very heated because you have a very, very powerful person in there who has been shunted aside. And now you've got 4 directors resigning. Fascinating. Yeah,
and it was always very curious, wasn't it, that deal had not yet been signed. Clearly, there's been a lot of discussions being taken place behind closed doors. Overall, that was a very, very dramatic day, right? That's probably an understatement, really. You got 4 directors, all independent, resigning from a board en masse. Have you ever seen anything like this?
No, not 4 independent. Well, no, I can't recall ever seeing 4 independent directors resign. The fact that they're independent means that the ones on the board now are tied to Richard White or to the company in some way, and that's really significant. I mean, they announced that consultancy deal in October last year. It's a 10-year deal, still hasn't been signed. What's going on there? White himself owns 38% of the company. He's been running it for 31 years, incredibly successful, but I think it's very hard to push like that someone aside. I wonder whether they can't. I mean, that might be the issue here. It's been 4 months that they've been looking for a new CEO. Still haven't found one. Not an easy gig. Could you imagine having Richard White as a consultant sitting over the top of you? I don't think so. The results are out tomorrow. WiseTech Global's out. Results are out tomorrow. Richard White should be front and center in that. It'll just be interesting to see how he goes. The board has also done an internal board review into White's behaviour. We haven't seen that. They'll be under pressure to release that as well. It's just fascinating. Not often do you see a company self-implode like this one.
So 20% yesterday for WiseTech. I imagine that would have hit the tech index. What about the broader local market?
It actually wasn't too bad today. The S&P ASX 200 closed up slightly, about 0.1%, to 8,308 points. It had fallen earlier in the day, then climbed back. The tech index tumbled, as you suggested, on the back of the WiseTech Global announcement. Utilities did best, but the banks bounced. Remember last week, they fell off about 8 or 9% across the broad financials. Well, yesterday, Commonwealth Bank, National Australia Bank, ANZ were all up 2% or more. A few earnings worth a mention, always worth a mention, but I love the first one. So it's fast fashion jewellery chain Lovisa announced a jump in sales and earnings for the December half. The result was under expectations. Its share price closed down 4%. But I reckon this has to be the fact of the week. And it's Tuesday.
That's a big call.
It is a big
so
call.
early, but go on.
That company, Lovisa, now has 943 stores in 49 markets.
That's a lot.
Last year, it opened stores in Côte d'Ivoire. I can't say it. The Ivory Coast.
Côte d'Ivoire.
Côte d'Ivoire. Thank you.
Really?
Thank you. Côte d'Ivoire. In the Republic of Congo.
What?
And Panama.
I'm so glad that you didn't do what you normally do, which is kind of ask me that as a trivia question. Because I would never, ever have guessed the Republic of Congo.
Yeah.
Ever.
Yeah. Côte d'Ivoire either.
No, I wouldn't have thought that they were kind of the typical target market for Lovisa.
You get miners going into some of those African countries, but I don't know many non-miners doing it.
No.
Very cool.
Yeah.
Gas pipeline giant APA, it reported as well, jump in revenue and underlying profit. Share price was up. What was interesting out of that one, it said it's going to expand its East Coast gas grid to allow for a 24% increase in the volume of gas piped south from Queensland. There's a big squeeze on in Victoria at the moment around LNG, and so what APA hopes to do is pipe more down from Queensland. A few others, Nib Holdings posted a fall in first half profit, but its share price jumped 12%. Reece, a long-time favourite of analysts, plumbing group, tumbled 13% after its profit disappointed. Nuix dropped 8% after the company increased its half-year losses. The other one that was worth watching yesterday was Domain. So we know that there's a takeover. CoStar is trying to buy Domain. We'll find out more today when Nine reports. But Domain held on to its 40% gains of last Friday, so it was flat yesterday. That suggests that analysts, investors think this is in play. We haven't heard from Nine Entertainment about Domain. Nine owns 60% of Domain, yet we will today. But clearly analysts expect this deal is going to get done.
Oh, it's actually really exciting.
Oh, it's great.
Seeing this kind of thing. And so anyway, stick around for the afternoon report this afternoon and we'll see what's come of that. Also, stick around after this show because we've got an interview coming up today with the co-CEO of Guzman y Gomez, Stephen Marks.
So Stephen's still very confident about the rollout of new restaurants in Australia. He's very frank about the challenges of building a brand in the very crowded US market. A real enthusiast, a real optimist, not unlike Don May in his original days. Yeah. I would say Don May, the Domino's guy. He's enthusiastic. Now, Guzman y Gomez, its share price after the results came out fell 14% on Friday, another 7% yesterday. So I'm not sure their investors are quite as excited as Stephen is, but he goes through why he thinks it'll be a success. It's a great chat.
Yeah, it really is. It comes as part of our partnership with Ausbiz, the country's leading provider of live and on-demand video of the latest news in Australian business, markets, economy and startups. Sign up for free at ausbiz.com.au. I just love in the middle of this interview where Stephen Marks actually sledges old El Paso just in the middle of it. Just You've never heard somebody so passionate and so enthusiastic about the industry that he is in. I love it. It's a really good listen. So stick around. It's coming up a bit later on. We've got a lot more to cover. We're talking polls, good news for the coalition, Sean, peak demand for petrol and diesel. That's a fascinating story and a very intriguing one involving Atlassian's billionaire co-founder. Much more to come. We'll be back in a moment with the rest of the day's business news. Sean, the coalition has opened up a 52 to 48% lead in the polls on a two-party preferred basis, although Prime Minister Anthony Albanese's personal approval rating has improved.
That's according to the Fin Review Freshwater Strategy poll. An election, of course, is due in the next couple of months. Calling that election is likely in the next couple of weeks, according to the Fin. This is the first poll taken after last week's interest rate cut. The swing away from Labor since the last election is about 4.1 percentage points. If that occurred across the country, which is unlikely, this is a poll of 1,048 people, so you can't say it's going to be the same swing across the country. But if it did happen, the coalition actually could form government. That would be enough for them to take 76 seats. Freshwater Strategy's done a little bit more work. It suggests the outcome of the upcoming poll is coalition at 70, ALP at 67, and 13 very powerful crossbenchers. So you need 76 to form government in this country. The Greens will have some, so you're kind of looking at the coalition and ALP/Greens at about the same number, and then some teals and independents who'll hold a lot of power. Anthony Albanese's net approval rating came in at minus 11%. Doesn't sound good, but it's better than what it was. Dutton was minus 8%, which means he's better than Albanese. And as preferred PM, Albanese remains ahead of Dutton, 45 to 43%.
What do you make of these polls? Now, do you take polls with a grain of salt? Now, because you look at what's happened in the US, and just say as recently as last year with Donald Trump and Kamala Harris, which was tipped to be very, very, very close.
Yeah.
And in the end, it was a landslide.
A landslide.
It was a landslide to Donald Trump. Do you take polls like this now with a grain of salt?
I think you've always taken polls with a grain of salt, but everyone looks at them. Yeah. I'm sure that the coalition and the ALP looks at the AFR freshwater poll, looks at the Aussies poll and says, the trend is your friend, Michael. We have discussed this in economics nonstop. And same in polling. The trend is your friend, and the trend is away from the government at the moment.
Okay. All right. Now, Perpetual, Sean, has walked away from its $2.18 billion breakup deal with KKR after rejecting the private equity giant's last-ditch offer to get the transaction over the line.
This has been painful. It's been going on for a long, long time. Perpetual said it had terminated the scheme of arrangement after the parties were unable to meet on price to salvage the deal for its wealth and corporate trust units. This was a done deal. It really was. They were locked in negotiations, and then the tax office came out and said it would charge $500 million, like a $500 million tax bill on the move to separate the businesses and remove any franking benefit for shareholders. That totally scuppered the economics of the bid. So the two parties, Perpetual and KKR, went back to the drawing board. They can't get a deal done. The Australian's reporting that the parties explored alternative structures to unlock value for shareholders, but KKR didn't come up from its original $2.175 billion bid. Perpetual share price was down 2% yesterday, but it's up 16% this year. It's actually been a really well-performed stock this year.
Sean, this next story, I'm not easily surprised. Actually, yes, I am. I startle very easily. You just need to kind of say something behind me and I'm fleeing across the savannah. But demand for petrol and diesel in Australia has hit a new all-time high, which is not what you would expect, right? Considering this massive, massive push that we've seen by many consumers into electric vehicles.
Yeah, so the chief executive of Ampol, Matt Halliday, made that claim about petrol and diesel, as he conceded also that the company is really struggling with the rollout of its EV charging stations. His point was that people still want petrol and diesel, even though there's a lot more noise about everything else. A few points out of that result yesterday. Ampol's got 25 EV charging sites. It's really struggling to connect up to the grid to get green energy, and that's actually delaying the rollout of these sites. Ampol itself reported a big drop in profit because its Lytton oil refinery has slipped into loss. Now, it supplies about a quarter of total transport fuel in Australia. What Mr. Halliday said was the take-up of EVs in Australia was flat, declining in New Zealand. And he basically said, look, the energy transition in Australia is going to be very costly and challenging. This prompts me to think of something else, because there was a story in one of the overseas papers, I think it was the FT, and it talks about how car makers, so General Motors, Porsche, BMW, Mercedes, they're all pushing into hybrids and upgraded internal combustion vehicles, engine vehicles. So this year, the forecasts are for hybrid launches to rise by about 43% to 116.
Wow.
And internal combustion engines would be down just a touch. But all these big manufacturers are pushing in to hybrids.
If we'd had this conversation 5 years ago, we would have said, no, EVs are the way that everyone is going. But no, it seems that we've kind of veered off in the direction of hybrids now.
And charging stations are a really big problem, and the fact that it takes so long to charge something.
There you go. Just a quick one, Sean. Australia's biggest data centre company, NextDC, has announced larger losses than previously, but it's going to reward its executives with big options packages. This is interesting.
Yes. So 17 data centres. Yesterday, it announced it would be providing one-off incentive packages trying to keep talent. So in this digital infrastructure world, you've got NextDC, but you're up against Amazon and Google and Microsoft and AirTrunk. Basically, the chief executive of NextDC will receive $50 million in stocks if the share price increases 124% by 2030. You'd hope that would be the case. There's about $100 million for senior execs and managers. That's what you have to do in that world when you're trying to keep management.
We are in the wrong industry.
We are definitely in the wrong industry.
Oh, that's a bit of an eye-opener. Billionaire Atlassian co-founder Mike Cannon-Brookes, Sean, this is fascinating, has accused his former company secretary of secretly emailing confidential information about his private companies to his estranged wife, Annie Cannon-Brookes.
Kevin Chu was terminated as Secretary of Cannon-Brookes Services earlier this month after the company alleged he used his personal email to send documents belonging to the company to Annie Cannon-Brookes and former Chief Financial Officer Catherine Manuel. In 2021, Chu was appointed Company Secretary of Cannon-Brookes Services, the Cannon-Brookes Foundation, and a number of other entities, including an investment vehicle, CBC Co., through which the billionaire Mike Cannon-Brookes holds investments, including his stake in AGL Energy. Now, Cannon-Brookes separated from Annie in 2023. She stepped down from the company soon after. They've not finalised the division of their assets, that to $24.4 billion. They've got to split up. Cannon-Brookes is now pursuing Chu in the Supreme Court of New South Wales to prevent him from using or sharing any confidential information. Chu's lawyer said his client denies any wrongdoing, but a very difficult situation when there's a divorce in the middle of it all.
Yeah, absolutely. Turning to international news now, Sean, and Germans have voted for centre-right candidate Friedrich Merz to head the country's parliament. He immediately promised to, quote, achieve independence from the US.
The first big European election post-Trump administration 2.0. Germany definitely shifted to the right. Merz's Christian Democrats came first with 28.6% of the vote on Sunday, leaving it needing at least one coalition partner to secure a working parliamentary majority. Germany's far-right, Alternative for Germany, came second, highest ever vote share of about 21%. Within hours of the polls closing, Merz declared that Germany had to fundamentally remake its security arrangements and end a decades-long reliance on Washington, given that US President Donald Trump was largely indifferent to Europe's fate.
All right, Sean, up next is the Fear and Greed daily interview. Our guest today is Stephen Marks, the co-CEO of Guzman y Gomez. It comes courtesy of our partnership with Ausbiz. It is a great interview just to hear someone who is so passionate about what he does and very, very passionate about Mexican food. Sean, thank you very much.
Thanks, Michael.
It is Tuesday, the 25th of February, 2025. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson. That was Fear and Greed. Have a great day.